If you're like me, your YouTube feed is probably overflowing with viral strategies promising incredible returns. But do they really work in live market conditions? That's what we want to find out in this series. Today, we're putting a specific strategy by pin trades to the test. In this video, we'll break down exactly how this strategy is supposed to work. We'll cover the setup, how buy and sell signals are generated, and most importantly, the specific rules for entry, stop loss, and take profit. Let's get into the details. For this specific test, we're making a few key adjustments to the original strategy's parameters. We'll be focusing on Bitcoin, analyzing its performance on the 15-minute time frame. Furthermore, I have updated the risk-to-reward ratio to 1:2. I've observed in initial assessments that this particular ratio seems to be hit more frequently. Let's break down the strategy itself. Let's add the first indicator. Simply go to TradingView, select your preferred security, click on Indicators, and search for Tuple Oscillator by Big Beluga. This strategy incorporates the volumetric variable index dynamic average. After adding it to your chart, double-click its settings. The strategy specifies changing the VIDIA length to 34 and disabling the lines option on the style. The VIDIA indicator's primary role here is to confirm trend, direction, and strength. A green trend ribbon indicates a bullish trend, while a red trend ribbon signifies a bearish trend. Importantly, the strategy emphasizes using delta volume as a measure of trend strength. A trend is considered strong enough if the delta volume is at least 20% or minus 20% for bearish trends. Now, let's outline the precise rules for executing trades. For a long buy position, the strategy requires 3 conditions to be met for an entry. First, a buy signal must be printed by the two-pole oscillator, and crucially, this signal must appear under the 0.5 level on the oscillator scale. If printed above this line, the signal is considered invalid. Second, at the exact moment the two-pole oscillator signal appears, the VIDIA indicator must be colored green, confirming a bullish trend, and its delta volume must be at least 20% to confirm sufficient trend strength. Third, the strategy notes a 2-candle delay for the two-pole oscillator's long signal. The signal appears on a specific candle, but the actual entry should occur after the close of the second candle subsequent to the signal. Once entered, stop loss is to be placed directly under the bullish invalidation level or to the last swing end. The take profit is set at 2 times the risk. This would have been a profit. For a short position, the conditions are the inverse. A sell signal must be printed by the two-pole oscillator, appearing above the 0.5 level on the oscillator scale. Concurrently, the VIDIA indicator must be red, confirming a bearish trend, with a delta volume of at least minus 20%. Similar to long trades, the short signal is subject to a 2-candle delay, meaning entry should be made after the close of the second candle subsequent to the signal. The stop loss is to be placed directly above the bearish invalidation level, and the take profit is also set at 2 times the risk. So let's test this strategy with 100 trades. I'm back after 322 days with the results of 100 trades. But look at this performance chart. We ended up with a total profit of 94%, turning a starting account of $1,000 into $1,940 before fees. Across all trades, we had 49 wins and 51 losses, giving us a win rate of 49%. What really pushed the results is the risk-reward ratio of 1:2. That means our average win came in at plus 4.4%, while our average loss was only minus 2.1%. Even the maximum drawdown stayed limited at just 10%. Of course, keep in mind that these results are backtested and performance can vary in live conditions. But overall, this strategy has shown itself to be both profitable and stable. This strategy may have come in second, but for me, it's the clear winner. The reason is simple. it's not nearly as time-consuming as the scalping strategy on the 1-minute time frame. And the higher average return per trade ensures you don't get eaten up by the fees. If you found this breakdown helpful and want to see more trading strategies put to the test, be sure to hit the like button and subscribe to the channel. Thanks for watching, and I'll see you in the next one.